Hello everyone and welcome back to Fiscal Mind, a platform explaining the financial complexities that surround us. Despite an outwardly booming economy, many Americans find themselves caught in a financial paradox. We ask, how can the economy thrive while ordinary citizens grapple with rising costs and stagnant wages? This puzzle isn't simple. Today, we explore why so many of our compatriots face this predicament. Across the nation, a cost of living crisis is causing anxiety in households. It affects everyone from new graduates to retirees on fixed incomes. It's not just a minor hiccup, it's a financial tsunami threatening to engulf millions. Amidst positive economic headlines, a sobering reality exists. For every shining headline, there's a hidden story of struggle. So how can we navigate these turbulent waters towards financial stability? News outlets and government reports laud the booming economy, yet beneath lurks a dark reality. Millions of Americans are drowning in financial insecurity. How is this possible? Let's break it down. First, let's talk about wages. They are crucial, the primary determinant in job choices for the majority. On the surface, it may seem like an upward trend. Wages have increased, but that's just part of the story. Don't forget about inflation, a hidden player affecting the value of money and influencing our purchasing power. When adjusted for inflation, the picture isn't as optimistic. The buying power, the true worth of what you earn, that's where reality comes into play. Recent data reveals that the purchasing capability of an average American decreased last year. A pattern is emerging, a scenario where you work more, earn more, but can't buy more. Your earnings from last year, although higher nominally, are worth less now. The money in your hand is losing its power. The gap between wages and buying power is widening each day. It's a quiet testament to an economic challenge that begs attention before it escalates further. It's a silent reminder of an economic conundrum that needs to be addressed before it's too late. And this brings us to the crux of today's discussion, the cost of living crisis of 2024. A year of escalating costs infiltrating our lives, from groceries to gas, driving prices to an all-time high. This crisis, not confined to any region, has impacted urban and rural settings alike. Everyday necessities, once taken for granted, are now sources of dread and apprehension. The cost of living is a daily concern in every household. People are forced to reassess their spending, often having to make significant cuts. The healthcare system too has felt the strain, with increasing costs of medical services and insurance premiums. Basic healthcare has become a luxury, with many having to renounce it altogether. Multiple factors contribute to this alarming rise. Supply chain disruptions, a fallout of the pandemic, have made a significant impact. Geopolitical tensions exacerbating energy costs have further complicated the issue. The imprint of pandemic-era policies is still resonant. Measures to cushion the economic impact of the pandemic have had lasting repercussions, further fueling the cost of living crisis. This issue is a tangled web of economics, politics, and global issues. Beyond supply and demand, it involves monetary policies that have pumped money into the economy, leading to the ironic devaluation of the dollar. The cost of living crisis is a manifestation of a broader, more complex economic struggle, a struggle affecting people's lives deeply. It's about years of monetary policies that have pumped money into the economy, devaluing the dollar. While some have benefited enormously from financial policies, the average worker is seeing their standard of living decline. We exist in a rapidly changing world where the cost of living rises and wages struggle to keep up. The disparity isn't just about the disproportion of wealth, but an intricate tale of global financial markets. These policies have ushered in a new era of wealth for few, with access to unrivaled resources and opportunities. However, for the common worker, these policies have resulted in a stagnant economic state. Rising costs and stagnant wages have made it harder for the average person to maintain their standard of living. We're in an era of greater instability. The economic future is uncertain, with volatile stock markets and global events impacting personal finances. But daunting as these truths may be, they aren't overwhelming. Knowledge is power, and we're participants in this financial landscape. We aim to equip you with financial strategies. The initial step is recognizing the need for personal financial. This includes understanding income and expenses, monitoring your spending, and planning for the future. Primarily, building and maintaining an emergency fund is crucial. It might seem intimidating, but even small amounts can accumulate. It's more than just having money for emergencies, it's about financial security to handle unexpected expenses. Finally, diversify your investments. Spread your money across various assets like stocks, bonds, and real estate to manage risk and increase returns. Diversification is a powerful tool to protect your investments against market fluctuations, aiding in securing your financial future. Don't put all your eggs in one basket, especially in a volatile market. Diversification can help you protect your investments against market fluctuations and economic downturns, thereby helping you secure your financial future in the long run. Click like and subscribe.